Hello my fellow freedom builders and welcome back to the channel. I do apologize for the large time span since my last video, but I have been very busy in my company doing a lot of stuff for my subscribers and so on. So right now I thought I would make a quick video answering a question that I have gotten from many of you, and that is people are puzzled about why the tech stocks are dropping. And yes, we have seen quite a drop. Let me just show you something here. We have some EV stocks here. They are dropping like a rock here. We can have a look at some renewable energy stocks. There are some good around here, but we also see a lot of red numbers yesterday anyway, or the day before. We could take some of the smaller stocks as well. I know these are not tech stocks, but let's say for instance cannabis stocks here. Also dropping quite dramatically, and all in all we can see many of these smaller stocks that were hyped a lot last year, they are dropping, and the question is why. And here I come to a point that sometimes people question me why I have such a lot of attention, why I pay a lot of attention to the overall macro picture in the world. Why do I care about interest rates or inflation rates and so on? Why not just look at a graph? And yes, you could do that, but I do try and figure out why we see what we see in the graph, because that makes me a better investor, or at least that is how it goes for me. So right now, what we are witnessing is that there's get a lot of power into the US economy, maybe even the world's economy. We can still see some virus shutdowns around in Europe, but we can all over the world see that there's a lot of economic upswing coming. I know there's the stuff going on in India. We don't know if that will spread into China and so on. But if we look at the oil numbers, how much oil is bought and used, we can see that that is increasing, and that is normally a good sign that the economy is taking upwards. Now, why are these tech companies then going down? You could say that Biden, he's setting up a big stimulus plan, a big infrastructure plan, where he will focus a lot of green energy. So I definitely don't think that this green energy sector is dead. Nowhere near. US and China, I think, will start really competing really hard on this green tech area, and I think that will show in the prices over the coming years. But right now they are dropping, and the reason is, in my opinion, of course you could say that the prices were too high. Let's just have the Sunrun stock here. Yes, it might have been too high at 100, but maybe it was also too high at 30 down here. So why is it dropping all of a sudden? Now, the reason, in my opinion, can be found in the upswing in the economy. Because what is happening right now, and I have addressed that in several videos, is that the inflation is coming. And it is not to play on the winter is coming, but you could almost say it, maybe the summer is coming, because the inflation and the economy is getting hotter. It is getting maybe a bit overheated, and it has come so far that even Janet Yellen the other day said that she absolutely saw a rising interest rate somewhere in the future to try and tackle and cope with this higher inflation rate. And I know she went out a couple of days later saying, oh no, that was not what I meant, but it clearly was. And that was bringing the stocks down a bit. Now, what is happening in an overheated economy? Well, the inflation rate is going up. In my opinion, it is already up, but at least it will go up. Even Jerome Powell and Janet Yellen and Fed is saying so right now. The inflation rate will go up. As I have addressed in many videos, when the inflation rate goes up, then the interest rates go up. And this is a crucial point for many of these tech stocks. Let's have a look at the Sunrun, for instance. Now, how are the fundamentals here? If we are taking a look inside Stockopedia here, we can see overall the stock rank is 16. That is not great, but let's have a look at some of the fundamentals of Sunrun, because normally in many of these hyped stocks, people tend not to look at the fundamentals. They're just saying, well, it is in a sector and industry group that will be a high demand for in the future. And yes, they are. But that doesn't mean that we could trade it at a price earning of infinite numbers, several thousand. So let's have a look at down here how Sunrun is actually looking here. Earnings per share, not really looking that great. They're burning money. They have a negative free cash flow. When we're looking at the debt, that is going up, and we can see that also on the gross gearing here. That's also what's called the debt to equity, where you can see how much leverage they're using. So you can see that's rather high, and you can see that they cannot even pay their interests. This is the interest coverage is how well they can pay their interest on their loans with their earnings, and they can't. They cannot even pay their interest rates right now, which means that if we see an economy where it is really running hot and the inflation is going up, then the interest rate will go up as well. There is no way around it. I know Fed can try all sorts of funny tricks, but there's no way around it. The market will adjust, and you should think of inflation as the point where your money is getting worth less. Let's say there's an inflation of 3%, then your money is worth less by a factor of 3% in a year. So if the bank is loaning money out to some company in the United States, and they know that their money is getting less and less worth by the year by 3%, then they will demand an interest on 3% plus something to make money on. So the interest rate will shoot up. And that is why this is a problem. The hot economy will bring inflation, it will bring higher interest rates, and that will make companies like Sunrun here sit in a really, really tough place where they'll have a lot of problems. They might have to dilute their share capital. They might want to bring in more capital. They need to do something. And considering, I mentioned that in a video a while back, that around 20%, maybe a bit more, of the US companies are what is called zombie companies, meaning they can just barely pay the interest rate. They're just making money enough to pay the interest rate, but they cannot develop new products, they cannot buy new machinery, they cannot invest into production, manufacturing, robots, and so on and so forth. 20% or more of the US stocks or US companies are zombie companies. That means that if the interest rates go up by 1% or 2%, they will get killed. And this is what we start to see in the tech sector. Now, let's give you another. Let me give you another example. It could be a stock that I mentioned a while back, the MarineMax, a quite small company as well. Before we just look at this, let's just have a look at the S&P 500 here, just to compare with, for instance, the Sunrun or some of the other EV and green tech companies. The S&P 500 is just shooting upwards because it is going well in the overall economy. Now, if you know it is going well in the economy, and you could argue that it might actually not, but let's just go with the Powell Fed narrative right now that it is going well with the economy. They are printing money and people are getting more money to spend. Now, what should we invest in? Well, first of all, you could argue that MarineMax, as you can see here, we're just finding them in the Stockopedia as well. If you don't know that, there's a link to it below. They're running some, I think they're running some discounts right now. But when we're looking at that, they are selling yachts and boats and all sorts of stuff. And when people have more money between their hands to spend, well, then they might go out and buy a boat. So, and with the economy going up, with people getting vaccinated and so on, this might be an area you could consider. But looking at the HCO here, quite a clever little play on the ticker with H2O. But the MarineMax here, I started talking about that when it was, I actually don't recall, was it here in the, maybe around the 30 mark here? I think it was. It might have been a bit earlier here, around the 22. But anyway, it has been going up, 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 up. And of course, they have also taken a little hit here, but then they are up again. So they are up at least 100%, maybe 200% since I started talking about them. Now, when we look at the fundamentals on the MarineMax, you could say that, yeah, high inflation rate isn't that bad. No, not necessarily, at least not if it gets too high. And a higher inflation rate shows us that there's a lot of power boiling in the economy. So it's actually kind of a good sign, at least, that something is happening in the economy. We are not moving completely backwards. So when you want to invest in a good company, and we are seeing potential high inflation, potentially higher interest rates, you want to find companies that are focused on this, on making money in this economic environment, but also that are not very highly leveraged. And let's have a look at something like MarineMax. You can see a stock rank of 99. That is great. We have a PEG ratio at 0.7, which means that we are not paying particularly a lot for the future growth here. But what we really want to look at, first of all, are they making money? Yes, they're making tons of money. Do they have some free cash flow? Yes, they do, and it is going up. What about their debt? Well, their debt is actually, I think they've been bringing in some extra capital or something like that. Their net debt is not terribly high. We can see that their gross gearing, their debt to equity, is actually quite low. And we can see that their interest coverage, from their earnings, they can pay their interest expenses in a given year almost 32 times over. Meaning that even though the interest rate should go up a bit, even 1% or 2%, they would probably not get in trouble. It might kill some of their competitors, but a high interest coverage, a low debt to equity or gross gearing here, that is actually some of the things you should be looking at in this rising interest environment. I can tell you that the strategies I have running, for instance, on eToro and also in the upcoming fund, they are planned in a way where we are finding momentum stocks out from some algorithms we have. And they can get a bit in trouble in a single quarter if the interest rate is going up a lot. We could be running into a scenario where in our portfolio we actually had some run in the portfolio. However, because I've gotten a lot of questions about what about your eToro portfolio, for instance, won't that be hit by a higher interest rate? Well, it might be hit in a single quarter if we had sun run. Let's say we had it because it went up a lot, and now we are getting hit by the downturn here. But then next quarter, we will cycle in, we'll reallocate into other momentum stocks. And that might be stocks like the MarineMax or whatever are in our investment universe. So never be afraid, even though you are a technical analyst like I am primarily, never be afraid of looking at the fundamentals and try to understand what is actually going on in the economy. That will only make you a better investor when you can see why the development in prices are coming. By the way, today, let's just have a look here at my FX book. That's one of the it's a free site. You just go on into my FX book, into the economic calendar, and you can see what is coming up of numbers today from all sorts of countries, and you can even customize some of it from date, and you can say that you only want the one with high effect on the market and so on. But if we go down here, we can see that in a 4 hours time here, that is 2:30 my time here in Denmark, we can see that we're getting the non-farm payrolls. That is showing us how many jobs are created in the US economy. Last time it was 916,000 in a month. It is the first Friday in every month this number comes out. And they are expecting 978,000 today. I think the number will be higher. You could also argue, you could always argue that this is a fake number. I know that Donald Trump in 2015 were saying this, and I actually agreed with him. he said that, well, these good job numbers are actually fake because they're created by pushing the interest lower. And I completely agree with him there. I know you're a bit shocked here, but I actually do. What we see right now is that the economy is boiling, and this is going up, but it's going up on a fake base, if you ask me, because it is built on money being printed by Fed. But that is another story. I think this number will be higher. I think it'll be higher than 1 million today. And if it is higher, if it is better than expected, then you will see a lot of businesses going up. You will see the financial sector going up. Now, why is that? Well, it is because with a lot more activity in the economy, there'll be there'll be less collapsing bankruptcy companies, but you'll also see a higher interest rate. And the banks do like higher interest rate because it makes it easier for them to make money. So I hope you see that it is important that you understand all of the different combinations and factors that play into your investments. So keep an eye on the non-farm payrolls today. I'll make sure to post this video before 2:30 here my time, so that you can see the numbers and see what I mean before the actual time. Okay, I hope this was kind of an answer to why are the tech stocks dropping. In my opinion, they are dropping primarily because of interest rate. I know a lot of people are talking about that the big funds are rotating out of it and so on. And yes, they might be, but you need to ask yourself, why are they doing that? And that is simply because when they can see that it's pretty much cheap 0% interest rates, well, then they can easily invest in these tech stocks that needs to borrow tons and tons of money. But the second they can see that we'll probably see some higher interest rates in a very short time, then they are rotating out of tech stocks and into some more solid stocks. All right, I hope that made sense for you. Otherwise, please feel free to leave a comment, hit the subscribe button, hit the like button, all you can find down there, and I'll talk to you again soon. Take care of yourself and your money out there. Bye for now.